Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking energies, and oil continues to push higher. Right now we're near a 3-week high. We saw oil prices push higher. Not only is it something we've seen, it's the recent trend. It's kind of just now starting to push again. Looks like it may even test those highs we saw not too long ago, up near $66 a barrel. We aren't there yet, but we certainly are trending that way. And if you look at what's happening in oil volatility is interesting because we do see it spike on these big moves, and as the market tends to go with the trend or against it, we do see days and moments where volatility goes very high. We're not seeing that right now. And if you look at the trending prices in oil, yes, it's been going higher. Yes, the definition of a trend is when prices do as they're expected to. But if you go back a few years, and you look at what OPEC did, cutting their production, and then you look at the non-OPEC members, the key ones in not only in Central Africa but also Russia, they were also on board. Oil prices started to go higher for a reason, and I think that's when we started to see oil volatility really start to trend lower, with the wild card obviously being the United States. And right now, the balance that we're seeing, the glut of oil supply is starting to at least go down. And I think that's one of the reasons why oil volatility is going lower, and one of the reasons why we're seeing prices trend higher. So right now, if you look at those two things, you got to go back to positioning, and positioning is such that the spec longs remain their all-time longest. Why not? Prices are going higher. We know the productions are going to remain, on the low side. At least they're going to remain at the levels that they promised. And we have seen like 2 weeks of moderate exiting of longs, but it's certainly, we are miles from seeing any kind of trend shift. Right now, the specs are remaining long until they're told not to, or at least until there's a major signal. And we just have not seen that signal yet, especially if you start to see global GDP go up. That's only going to increase usage, which is going to take away from more of that glut that we just talked about. So right now, oil prices not seeing a whole lot of obstacles ahead of it. We do have obviously some psychological levels on the horizon that we'll watch, but I think right now it's going to be slow and steady to the upside unless there's some kind of catalyst event, which would obviously push us back down. But you're still not talking about a cratering. You're talking about $60 being the major psychological support, with maybe 67 to 70 being your psychological resistance to the upside. But as long as things go status quo, and if, like I said, GDP and can start to see a global GDP push higher, boy, usages are going to go up, and oil prices really you could see us even get to $75 a barrel this year. Of course, a lot of things have to happen before we get there, but right now things are looking very bullish for oil. This is Todd Colvin coming to you from the floor of the CME Group.